So today I just wanted to show you what kind of equity curve you should be looking at achieving in order to become a profitable trader. More specifically, with a strategy like liquidity supply and demand, where we have massive risk rewards as well as a very good win rate. So today I'm going to show you this pair that we recently back tested and forward tested in the VIP Discord in order to show you what kind of equity curve you should be looking at achieving. Now I'm feeling a little bit generous, so I'm going to show you the odd JPY spreadsheet from the Discord, and as you can see, the results are insane. Now obviously this is back testing, this is if we traded perfectly with no psychology, only taking B+ to A+ type setups, but if we can convert those skills to live markets, then these are the results we'd come out with. I'll show you the charts in a moment too, like these are legit. Any setups not taken were just because of them being low quality, but you can see here we are taking losses. We had 1, 2, 3 unprofitable months since the start of 2024, and that's with perfect back testing. But here's the thing, our equity graph is looking something like this. Am I on MS Paint? Yes. It's the best way to give an example, I swear. But how is it looking like this? Why is it looking so good? It's because our wins are big. You can literally see our average RR on each one is usually ranging between 1 to 5 to 1 to 10. And our losses are never going to be more than 1%. That's why these dips are so small. So this is the easiest way to trade in my opinion. It just makes everything so much more simple. It worked for me. But for example, let's say you did go on a big losing streak and you just lost this whole 10 RR that you just made from this move right here. And that's assuming you lost 10 trades in a row. You shouldn't be losing 10 trades in a row. You can see the win rate on here as well is pretty solid. Once again, this is if you traded perfectly with no psychology, so most likely wouldn't it be exactly this in live markets. You might take some of the lower quality trades. You might miss some of the wins because whatever reason. But let's just say for a moment that you did just go on a 10 losing streak, and that massive 1 to 10 win that you just took is now worthless. Well, all it takes is one win to get that all back. And once again, let me just say, if you're going on a 10 losing streak, then something's up. And then let's say you go on a 4 losing streak, which is very possible. That is very possible. You make that back and then some in one trade. That's what's so good about high risk rewards. You might take a couple losses, but you make triple that in the next trade. And you can see by the end of 2024, it was at 83.5% total. For me to add something to my main pairs list, it's usually around like 60% that I'm looking to see on like a yearly basis. But if we go back to the charts here, you can see all these setups are pretty gorgeous. On a lot of the low quality trades that a lot of people might have seen and thought was valid, I have written kind of notes on it. But yeah, if you don't know what my strategy is, it's called liquidity supply and demand. All we're looking for is a big push up where we get our demand zone get created, and then a little push down creating a level of liquidity, followed by a break of structure, and then reaching our zone, which then just pushes off. Pretty simple. It's literally just supply and demand, except we have liquidity to take out first because that is like one of the most important factors of just trading. But yeah, you can see that playing out right here. We had our demand zone, just the bearish candle before the big move up, came down, made our level of liquidity, broke the high to the left and came down, and boom, 1 to 8 risk reward. This right here was a loss, but you can see we had our supply zone, came up, made our level of liquidity, broke the low, came up to the zone, and it did come pretty far down, but it did end up losing. And you can see we do have losses. This one right here, pretty clean setup. We had our accuracy zone, level of liquidity, very clean structure down, and it pretty much just lost immediately. But once again, that's literally 1%. If I find, yeah, this is fine. This is literally 8%. Once again, high quality setup. We got our demand, liquidity, breaks of structure, came down to the zone, great rejection, and that's 8%. That covers 8 losses. Not that you should see it that way, because you will likely not have to cover 8 losses. Maybe you'll have 1 or 2, or even a couple more. But chances are, this trade alone would have not only covered those losses, but also made like 4 times the profit on top. And to be honest, just looking at these trades, we really should just be taking all these in the live market. You can see we came up, made a level of liquidity, didn't quite tap the zone. We broke the high, came down, great rejection, amazing trade. There's no reason we wouldn't take this in the live markets, and there's no reason we would take any of the ones that aren't marked up. And you've just got to be okay with taking losses. I mean, they will happen. Obviously, there's no 100% win rate. Oh, that was embarrassing. Win rate strategy. It's not a thing, but you've just got to do with it what you can and just come back and 10x the loss you just made. Not that you need to stop at 10 RR, this is just where we max out. This could have gone for minimum 1 to 45 RR, that's just because I can't see further right. Oh yeah, no, you could have gone for a 1 to 50. But yeah, if you do want to see the full backtest of this pair, or just the spreadsheet that I showed at the beginning, then that will all be in the Discord. Obviously you don't have to, it's up to you. But today I just wanted to show you what kind of equity curve you should be looking at achieving, and I mean how you can achieve that. And I know a lot of people might not have high risk reward strategies like these, and that's completely fine. Obviously your equity curve may be looking a little bit different, but I do think it makes trading easier to go for these high risk reward trades. It kind of allows you to not have to have a ridiculous win rate, so taking one of these losses won't really mean too much. I mean, I'm sure you've all seen seen this before. Going for 1-to-1s, you need minimum 60% win rate to even be the tiniest bit profitable. With 1-to-5 risk to rewards, you can be profitable with just a 20% win rate. And with a strategy like this where you're getting usually above 1-to-5 risk to rewards, we don't even need a 20% win rate to be profitable. So anything above that is just a ridiculous amount of profit. You can see we have the win rate noted down on these. I do want to preface again, these are like perfect backtest results if just no psychology was involved, and you're just able to take all the high quality trades available. But in these backtests, it probably ends up being around 60 to 70% win rate, and with an average risk reward of, I'd say, maybe 1-to-7. That is ridiculous. That is insane. You don't need to be getting even close to that to be just profitable. With 1-to-7s, you could probably get like a 15% win rate and still be like enough profitable to make a living off of it. Especially with funded challenges being a thing now, it's such a great opportunity. But yeah, you shouldn't let that equity curve be too scary. All you need is the slightest edge on the market. You don't need it to look like this. As long as it is going up, it's fine. It shouldn't be that daunting of a thing. There's so many ways of reaching profitability. High risk to reward trading is, I mean, for me, the easiest way to do it. But yeah, I hope this gave you some value anyway. I feel like I haven't really properly talked about this before, so I hope this brought some value to you. Maybe you learned something new. But yeah, that'll be the end of this one anyway. I'll try to get another video out next week. But yeah, peace.